Hi everybody, it's Terry Ryder from hotspotting.com.au and this is my monthly live Q&A, your opportunity to throw your questions at me. Anything to do with the residential property across Australia, any issues, any problems or locations that are of particular interest to you. Just bang in your questions to in the comments panel you see in front of you there, and I'll do my best to answer them. I'm going to kick off while we're waiting for some questions to come through by dealing with some of the current issues that are around the residential property at the moment. But the big topic, particularly out of Sydney and Melbourne, is the question of, now that the boom in those cities is winding down, what's going to happen with prices. And there's a lot of alarmist media out there, as there often is at this stage of a major cycle. I would point out that what's happening in Sydney and Melbourne is not replicated across the country. There are still some very strong growth markets in Australia. Hobart, still very strong. Canberra, a strong market. Brisbane and Adelaide, looking like doing better things in the next 1 to 2 years. Perth moving into recovery mode. And then, particularly, I think, in regional Australia, most of the strongest growth markets showing the biggest uplift in activity and the biggest potential uplift in prices right now in regional Australia. Places like we've seen Newcastle on the Central Coast in New South Wales move strongly. We've seen Geelong go ahead very strongly over the last few years, and now cities like Bendigo and Ballarat are joining the growth party. Some markets in Queensland also moving forward strongly, particularly the Sunshine Coast at the moment. And we're seeing recovery in some of those resources-related markets in Queensland and also in Western Australia. But I wanted to deal with some of the more alarmist predictions. They're always inevitable at this time. They come at any time, actually. Alarmist predictions about major collapse of our property markets. It's a subject I researched quite extensively in recent years, and I continue to research because I found that predictions of, big price decline in Australia, real estate doomsday predictions have been remarkably common over the last 15 years. Most of these have been people visiting Australia from overseas, wanting to drum up attention for a book launch or seminar tour. And they know that the easiest way to get free publicity and get bums on seats is to predict massive decline in our property markets. So we've had a number of people of that ilk do that, and they've all been spectacularly wrong, of course. And there's also been some homegrown economists who, for various reasons, have predicted a big decline in our property markets at different times over the last 10 or 15 years. They've all been wrong as well. Out of the research that I've done, I've constructed what I call my 20 worst predictions about Australian property markets, and my top 20 worst predictions list. And I wrote about this recently in my column on Property Observer, and I've referred to it in some of my broadcasts, but it's worth touching on this a little bit because we recently had the 60 Minutes debacle where they again predict that magic figure of a 40% decline. I don't know why it always seems to be 40%, not always, but often it is. Seems to be the magic number. It's never happened before anywhere in Australia. It's never happened anywhere in the world, in fact. Not even post-GFC, where there were some countries that had some major decline in their property markets, but nothing that big. And but there was one US speaker who came to Australia in 2012. His name was Jordan Worse, and he made the worst prediction of all those that I found in my research. This was in 2012, where he forecast a 60% fall in home values to take place in the next year in what he called an impending bloodbath. And he also tipped that our land values would decline 90%, which means he was basically saying that our residential land was going to be worthless in 12 months' time. Why? Well, media didn't report on that. They don't really care on whether it's reasonable. Certainly, media doesn't ever seem to challenge any of these people to justify their predictions or to question their motives. But he was utterly and spectacularly wrong. Others like Harry S. Dent. Harry S. Dent is kind of a doomsday forecaster. He makes his way around the world predicting Armageddon everywhere he goes. He's been to Australia 3 times in the last 7 years, and each time, including in 2011 and in 2014, he has predicted that our property prices are going to crash in the next 12 months by 40 or 50%. And again, of course, he's been spectacularly wrong as well. But they're not alone. We've had local economists like Steve Keen and others jump on that particular bandwagon for various reasons. They've all been wrong as well. There have been other types of predictions that have been spectacularly wrong too. In 2013, 2014, it seemed to be kind of fashionable to try and be the first to predict the end of the boom in Sydney and Melbourne. And people were saying in 2013, 2014, the boom's over. One Morgan Stanley analyst famously said about 3 years too early, as it turns out, if you're an investor, you've missed the boat. These people just seem to always get it wrong, but it doesn't seem to stop them from putting their heads up a little while later and making another spectacular negative prediction and getting it wrong yet again. So smart consumers just shrug it all off, forget about it, dismiss it for what it is. It's grandstanding for the worst possible reasons. It's not to be taken seriously. I hope none of you out there watching or listening are taking this stuff seriously. I've got a question here from Mark. He's asking, should I continue to hold a 3-bedroom house in Beenleigh or sell, use funds for a higher growth area? I get a lot of questions like that, Mark, and it's really, really hard to answer because the answer depends on your own circumstances. There's so many variables that would influence the answer to that question. I could get 6 people in the same situation with the same question, and the answer to each of those 6 people would be different depending on who they were, how old they were, whether they were married, had kids or not, whether they were facing retirement or whether they were in their 20s starting out, what they already owned in terms of a home and investment properties, etc., etc., etc. In terms of the performance, I think right now, if I owned property, you're talking about Beenleigh in the Logan City area and the southern suburbs of Brisbane. I think if I owned property in Brisbane, I would be hanging on to it because I think Brisbane's, which hasn't done much to date, is coming into a period of better growth. Now, a lot of people have predicted over the last few years that Brisbane's going to boom, and I think that they simply assumed that because Sydney and Melbourne had, then Brisbane would be next. But what many of those forecasters failed to understand is that Sydney and Melbourne boomed for specific reasons, and prime amongst those reasons were very strong local economy, major boost from population growth, big infrastructure spending, all those things that boost economy, create jobs, and out of that demand for real estate. Those things were missing from Brisbane, and so Brisbane hasn't followed suit. But the indicators are Brisbane is actually improving in all those areas. The state economy is improving, more jobs are being created. There's a big infrastructure spend coming up in Brisbane. It's starting now, and it's going to roll out over the next 4 or 5 years. That's going to have an influence. The population data, particularly interstate migration, is favouring southeast Queensland again. So for those reasons, I'm expecting better things from Brisbane over the next few years. So I would suggest anybody, all things being equal, not taking into account your personal circumstances, because I don't know what they are, but generally speaking, people who own property in Brisbane, I think now is not the time to sell in Brisbane. I think it's the time to hang on to assets in Brisbane, because I think that city is going to do better as the 2 biggest cities wind down. Other places are going to wind up. Brisbane is often on a different cycle to Sydney and Melbourne. So is Perth. Keep that in mind. We don't have one property market. It's not a case of the Australian property market, the economists keep referring to, is down and falling. We have lots of different markets, markets within markets, and it's not all heading south. Perth's recovering, Canberra's rising, Adelaide I think will rise, and I think Brisbane will too. Patricia. Old hat Brisbane real estate agent Patrick says, so prices will rise 18 months after Sydney. It didn't happen this time, so how can they be trusted? Well, I don't know. I haven't seen those sorts of comments, Patrick. What I do know to be true is that Brisbane is usually often on a different cycle to Sydney. It doesn't necessarily follow Sydney's trends. I don't think that happens. What happens is markets rise when the local conditions are in place to drive greater demand and price rises. Up till now, that hasn't really been in place for Brisbane, but I think it's changing, as I've just said. So I think that Brisbane is coming to a period of better performance, but it's got nothing to do with following Sydney or being 18 months after Sydney. It's about what's happening here locally in the local economy with infrastructure spending, population, jobs creation, and all of those things that are fundamental to driving local property markets. Alex, it's asking, generally speaking, your opinion on growth over the next 5 years in Brisbane versus Adelaide. Look, Alex, right now I'm pretty bullish about Adelaide, and I've talked a lot about it in these social media broadcasts, and I've written quite a bit about it. Right now, I've got a bit of a focus on Adelaide. We've just published our top 5 Adelaide hotspots report, and next week I'm going to be in Adelaide giving a seminar to local people, and what I'm going to be saying to them is that I think that Adelaide's going to be one of the leaders, and it's the most underrated market in capital city Australia, and I think it's coming into a period of growth. We're looking at all the signs. The economy is much stronger than people realise, and it's improving. Unemployment is lower in South Australia than anywhere in Australia except for New South Wales and Victoria, the 2 strongest economies. So it's actually ahead of all the other states and territories in that regard. Business confidence is high. Jobs are being created. There's some big things coming up in the economy, such as the contracts to build vessels for the Navy and a whole heap of other stuff. Very affordable. Vacancies are incredibly low in Adelaide. We've seen some pretty good rental growth. There's just some figures out today from Domain, in fact, showing where rentals are growing the most in the capital cities of Australia, headed by Hobart and Canberra, but Adelaide has shown about 5% growth in its house rentals in the last 12 months, well ahead of what's happened in Melbourne and Sydney, for example, or Brisbane. So I'm expecting big things for Adelaide. I think it's a bit of ahead of Brisbane in terms of the accumulation of factors that drive prices forward. Brisbane is starting to gather some of the ducks are starting to fall into line for Brisbane as well, but I think Adelaide's ahead, and possibly Perth also, but I think better things for Brisbane. Right now, if I did, I mean, it all depends on the individual circumstances. My thinking at the moment, personally, for my own personal investing, is very much I'm making decisions between Adelaide, Perth and Brisbane amongst the major cities, and also regional Australia factors into my thinking as well. Places like Ballarat and Bendigo and Victoria, for example. But I think the one that's got me most interested at the moment is Adelaide. Brian, where is the GC? I'm assuming, Brian, you mean Gold Coast on the way up or on the way down? Yeah, you are talking Gold Coast because you're talking about having a townhouse in Labrador. The Gold Coast is kind of going sideways a bit at the moment, Brian. It actually had a growth burst a couple of years ago, sort of, I suppose, 2015, 2016 into 2017. It was all about the boost it got from the Commonwealth Games. Now, a lot of people with a vested interest reckon that the Gold Coast was going to boom after the Commonwealth Games, but in actual fact, I never believed that was true. The impact of these sorts of events in terms of creating real estate booms are always overstated and overestimated. Where the boost came was in the construction period before the Games, because that brought a lot of new people into the Gold Coast. A lot of people had jobs on the infrastructure projects that were happening, some of it related to the Commonwealth Games and some of it just infrastructure that was happening anyway on the Gold Coast. But there was certainly an uplift for a couple of years pre-Games because a lot of jobs were created on the construction boom that happened pre the Games, and that was the boost. So there's a big uplift in sales activity. The Gold Coast was one of the leading local government areas of Australia in terms of the number of suburbs rising with rising demand, and there was some price growth there as well. But it was all pre-games, and so now I think the Gold Coast is in a bit of a post-games hangover, really. Yeah, a lot of its momentum does relate to the infrastructure spending and whether or not it can avoid periods of oversupply in high-rise apartments. That's a very key thing for the Gold Coast. In the past, it's just lurched from one boom bust scenario to the next, which has tended to suppress growth, particularly in apartment values along the coastal strip. Right now, not particularly a rising market, Brian, as far as I can tell. And one of the ways that I particularly chart these things is not looking so much at the price data, which I think is a pretty blunt instrument to be measuring markets. What I look at is sales volumes, sales activity, which means demand. And there was that period of uplift, 2015, 16, 17, and then it plateaued out. And now the Gold Coast is what I call a plateau market, where it's leveled off below the peak that it had pre-games. So Nav. I was asking which suburbs will show strong income growth over the next 5 years. I guess I'm flattered now that you think that I can answer a question like that just off the top of my head. It's a very broad question. It would require going away and spending a lot of time doing some research and then coming back and giving an answer that would probably take 30 or 60 minutes. It's certainly not one that I can do in a couple of sentences. Not even quite clear what you're asking. Perhaps if you could come in again and just sort of clarify and perhaps narrow down your question, because it's a little bit vague and too broad for me to be able to give you an off-the-cuff answer at this stage. Charlene, I'm building a granny flat in Eagleby. I'm thinking of selling the whole property in the granny flat. I think it's generally a good strategy to build the granny flat. Add some value to the property you got. Eagleby is one of those quite affordable areas in the Logan City local government area in the southern suburbs of Brisbane, heading down towards the Gold Coast. Building the granny flat, presumably Charlene will add some value to the property, but I wouldn't be in a huge rush to sell it. As I said a little bit earlier in this broadcast, I do think Brisbane metropolitan area is coming into a period of better performance, and I just be a little bit patient with the performance of that property. I'm just having a quick look at the Ready Reckoner here on price growth. Yeah, according to these figures, this is CoreLogic data. The median price for Eagleby houses is $320,000 at the moment. It's risen 5% in the last 12 months, according to these figures, and it's up about 20% in the last 3 years. So there's been a bit of growth there, not the sort of massive growth we've seen in Sydney and Melbourne, but Brisbane hasn't been doing that just lately. But there's been some growth there, and which is kind of what has happened generally in the Logan City area. That's had a bit of uplift. So quite a lot of interest from investors across Australia because it's very affordable compared to the biggest cities. Median house price in that suburb of $320,000, and the rental yields are way better than you can get in Sydney and Melbourne. So I just think there's more uplift to come in the Brisbane metropolitan area generally. So I'd just be watching the market and seeing how it's performing. As I said earlier, the population growth data is favouring southeast Queensland more and more. There was a period where it wasn't performing as well as it has historically, but it's now coming back. In the last 12 months, Queensland's been the number one state for population gains from net interstate migration. 90% of that goes to southeast Queensland. So we're talking Brisbane, the Gold Coast, the Sunshine Coast. There's improvement in the Queensland economy, big infrastructure spend coming up in Brisbane, lots of reasons to believe that we're going to see some better performance from the Brisbane metropolitan area, generally speaking. And I think the cheaper areas, Ipswich City in the southwest, Logan City, Moreton Bay region up in the north, are going to do pretty well. So, yeah, wouldn't be in a huge rush to sell. Build the granny flat, get it valued, and then consider your position, but just monitor the market. And talk to professionals like valuers and buyers agents, and just find out what's going on the market. It's all about, is demand rising? Is the market active? Brisbane is pretty steady at the moment, but it's just not really surging yet. I'm seeing greater uplift in cities like Perth and Adelaide at the moment than we are in Brisbane. But just to reinforce what I've been saying about Brisbane generally, I think one of the great drivers of growth in residential markets is infrastructure spending. I think that's one of the biggest single factors that's driven Sydney ahead so strongly. The infrastructure spend that we've been seeing in Sydney and continue to see has been quite massive. A number of multi-billion-dollar projects, particularly transport infrastructure, rail projects and motorway projects. And then we've got the second airport coming up. So that's been a big factor. It generates such big economic activity. It generates jobs. It improves the amenity of areas that receive the new infrastructure, and it's a great driver of prices. So how does this relate to Brisbane? Well, Brisbane has been lacking over the last few years, but that's changing. The state budget announced in June had I think it was a $46 billion spend on infrastructure across Queensland, and quite a lot of it going into Brisbane. And this report I'm looking at right now says that there are a number of very big projects now being rolled out in Brisbane and going to continue to be rolled out over the next 5 years, worth about $17 billion in total. And that's going to be a huge boost to the economy. It's going to generate economic activity. It's going to generate jobs. Demand for real estate is going to come. So this is the factor that's been missing, I think, in Brisbane. It's been very strong in Sydney and to a lesser extent in Melbourne. Wherever you have infrastructure spending of that level, you tend to have a growth property market. So some of the projects coming out, there's 10 projects listed in this report. They include the Cross River Rail project. That's a $5.5 billion project all by itself. Then we've got the Queen's Wharf Resort project. That's $3.5 billion. The Brisbane Live Stadium, $2 billion. The new runway at Brisbane Airport. Other projects with names like the Hurston Quarter, the West Village, Brisbane Metro, the Howard Smith Wharfs redevelopment, the Brisbane International Cruise Terminal project, the Waterfront Precinct, etc., etc. There's about 10 major projects there, and they total about $17 billion. And that's going to be a big driver of the Brisbane property market going forward for the next few years, I think. Okay, just a reminder that I'm here for the next, from the start of the broadcast for about an hour, but sometimes going longer depending on how many questions there are. Just type your questions into the panel where it says write a comment, and I'll do my best to answer your questions. Now, I'm sorry, your question earlier, I wasn't able to give you any kind of answer because I'm just really not quite sure what you're asking, and if you could perhaps come back in and be a little bit more specific and narrow it down to me, because it was a very broad question, hard to answer off the top of my head. One of the topics that I've had a few questions about already is just generally Brisbane, and it was interesting in relation to that to see some figures out this week in a report which relates to population projections for various areas around southeast Queensland, and really basically it was comparing population in certain areas in 2016, that's at the last census, to what's projected for the year 2043, so about 25 years from now. And there's a number of areas that are going to have, if these projections are right, of course, they're crystal ball gazing, and there's a potential to get it wrong, but I guess it's based on where the demand is being directed and where there's land available for new development. Logan City, which I've just been discussing with, had a couple of questions about locations already tonight. They're in the Logan City local government area in the southern suburbs of Brisbane. A number of areas there. Logan City generally is projected to have 90% growth in population over the next 25 years. And the areas that stand out, they're well above that. The Jimboomba area is going to grow 360% according to these projections. The Greenbank area is going to grow more than 500%. The Chambers Flat Logan Reserve area almost 500%. Ipswich City in the southwest of the Brisbane metropolitan area is a market that we track very closely because we think that it's got a lot of potential for growth. It's been a very good price growth area in the past. I think it will perform again in the near future. It's probably the most affordable part of the Brisbane metropolitan area in terms of house prices. It's got a lot of major jobs nodes there, and a lot of jobs nodes are being established out there for various reasons. The land is cheap, the transport connections are good, and so we have a lot of businesses setting up out there, and there's absolutely massive growth projected for some of those areas. Springfield Lakes projected to grow 340% in the next 25 years. The Bellbird Park Brookwalker precinct also projected to grow in that magnitude, 360% according to these figures. And the Ripley area, which is a new development area, which is just getting started at the moment, the growth there is projected to be 4,000%. That's because it's going from zero a few years ago, about 3,500 people now, but it's projected to have a population of 150,000 in that area in 25 years' time. So, yeah. Doesn't mean you should rush out and buy in these places. This is just population growth data. It's not the only thing that you should consider, but it's something to keep in mind. That's where some of the new growth is going to be happening. There's a few other places mentioned, but I'll turn to some specific questions. Michael's asking, do you have any views on Ascot Vale townhouse growth? Not specifically townhouse growth, Michael, but just bear with me. I always have some maps handy when I do this live Q&A, because sometimes I just need to refer to a location to get a view. I mean, I know where Ascot Vale is, but I just want to put it in context and look at what's around it so that I can give you an answer that's worth having. Okay. So let me just see, I've got it, just a little bit north of the Middle Ring area, north of the Melbourne CBD. It's an area that's shown a lot of growth already. Its neighbours include suburbs like Moonee Ponds, Brunswick West, Travancore, Parkville. It's pretty close to the centre of Melbourne. That's not the be-all and end-all of price growth. Can be a bit of a furphy, that view that the closer you are to the CBD, the better the growth, but certainly doesn't hurt being proximate to the CBD. And also, one of the things in favour of Ascot Vale is it's on the train line, so it's got a station, as does Moonee Ponds just up the line, and then Essendon further up. So it's it's inner city area, good transport links. It's going to be a good grower over time. Let me have a look at what it's done recently. And I think the thing to keep in mind, Michael, is that like most areas of Melbourne, the growth that's going to be had in some of these areas has already been had, and that we're going to go through a period where we're going to have a pretty subdued market in terms of price growth for a while, because prices just can't keep on growing to that degree forever. So Ascot Vale, median house price 1.13 million. The last 12 months, the growth has actually been a bit subdued. It's really been about what's happened in the last 3 years and the last 5 years. So the median price has grown 33% in 3 years and 60% in the last 5 years. So it's been just, what we've seen in Melbourne generally. But in the last 12 months, the growth rate has dropped, according to these figures, to about 7% in annual terms, but in the last quarter, -2%. So that's the house market. Let me just quickly flick over and have a look what it says about units, because you're asking about townhouses, and that would be sort of included in the figures for units for that suburb, if I can just quickly find it. All right. Median price for units in Ascot Vale, a bit over 500,000. Hasn't actually shown a great deal of growth, according to these figures, in the last 3 years or the last 5 years. And that can sometimes reflect the fact that apartments don't always, units, townhouses don't always perform as well as houses on land, depending on the supply sort of factor, which can be, and a lot of new supply comes into a market. We're talking about a suburb close to the inner city where there's been a lot of new development of apartments, and that is probably a factor in why we haven't seen massive uplift in the median price for apartments in Ascot Vale. I think it's going to be a little bit subdued for a little while going forward, because we're not going to be seeing massive growth, generally speaking, in Melbourne for the next few years. We're going to see a correction period. We're entering that now, generally speaking. Charlene, who asked a question earlier about Eagleby, saying I saw some good information on the subject from Michael Matuzik, and asking, do I get his regular missives? I do, actually, Charlene. I sort of tune into all sorts of information sources and commentary and analysis. And Michael Matuzik, Brisbane-based, has been around a long time, very, very good at analysing markets, often has a very interesting take on things. He's one of the more knowledgeable and credible sort of analysts of markets, particularly in Brisbane and southeast Queensland. So I get him, and I'm always interested in them. He always has a take on them that's often quite original, and certainly worth listening to. Doesn't mean he's right about it, everything, of course. None of us are, but certainly worth taking into account as part of your overall research. Keep in mind what he's saying about those markets. Jason, do you see any hotspots in Ipswich? It's interesting how many of the questions coming in tonight are so focused on the sort of southern and southwestern parts of the Brisbane metropolitan area. One of the ones, Jason, that stands out for me is that sort of the eastern end of Ipswich City, sort of around Goodna and Redbank. It's on the motorway, it's on the train line, affordable, a little bit closer to central Brisbane than other parts of Ipswich. Not that that's necessarily a huge factor, but some people live in the area sort of head east for jobs. But one of the key factors about that area is that it's major jobs nodes in its own right. There's some major industrial commercial areas very close to suburbs like Goodna and Redbank, and there's more to come. Earlier this year, there was an announcement by the federal government, multi-billion-dollar contract to build vehicles for the Army, and the company that got that contract is setting up its factory in the area I'm talking about, and that end, that's sort of Goodna Redbank precinct at the eastern end of Ipswich City. So that's going to bring a lot of jobs, and it's not the only show in town. There's lots of other things happening there as well. And those suburbs I mentioned are quite close to the Springfield master plan community that's been going on for a couple of decades and still a work in progress, but has brought a lot of amenity and infrastructure to that general part, that general area, that end of the Ipswich City local government area. A university campus, commercial precinct, private hospital, new rail links, major new shopping, all sorts of things. So I do like that precinct. Other parts which have potential as well. One of the things to look for if you're thinking about investing in the Ipswich City area is that, there's some older areas where you've got houses on quite large blocks of land where there's the potential to subdivide, and those are the sorts of opportunities you can look for in Ipswich. Goodna has splitter block opportunities, and some of those older, longer established suburbs out on the other end of Ipswich towards the Ipswich CBD, which is at the western end of the Ipswich local government area. They do have some of those older homes, old Queenslanders, and big blocks. Get a corner block that can be subdivided. You can actually accelerate the investment wealth creation process. Kevin is saying hello. Kevin, if you've got a question, you may be typing it in even as we speak, but please let me know what you'd like to ask. So yeah, just again expanding on my answer to your question, Jason, just looking at these population projections, one of them is focuses on that Springfield Lakes area, very, very big uplift in population projected there, and then not far away, Bellbird Park, Brookwalker, that area. That's quite close to the area I've just been talking about, the Goodna Redbank area. There's some of the newer development areas where new estates are happening. It also projects quite a big uplift to Ipswich Central, some more population going into this sort of in and around the Ipswich CBD, which has been kind of evolving, trying to raise the standard there for a number of years with commercial, retail and some residential development in Ipswich Central. So there's a lot of different areas of Ipswich that have potential, I think. A question from Alison, and it's another question on Brisbane. I'm hoping that there are some people out there in other parts of Australia other than Brisbane who have got questions on, let's have a question about Perth or Adelaide. Sorry, Alison, I don't undervalue your question, but it's just another one focused on Brisbane, coincidentally, and you're asking about Brackenridge. Again, I've had a number of questions tonight from people with property in different parts of the Brisbane metropolitan area thinking about selling due to a run of bad tenants. I'm not sure why you particularly have bad tenants in that area. Just bad luck, I guess, but I think important to have a really good property manager who makes sure that you can get some good tenants. I'm not sure what the vacancy rate is off the top of my head in that part of Brisbane, but I'm not sure why it would be so difficult to find some good tenants. I'm just looking at Brackenridge. Yeah, median price about 500,000. So it's certainly not bottom of the market in Brisbane. It's heading up towards middle market Brisbane. 505,000 median house price. In terms of growth, it's been a little bit in the last 12 months, according to these figures, about 15.5% in the last 3 years, 25% in the last 5 years. So, it's one of those, a typically moderate performer for what Brisbane's done over the last 3 to 5 years. I just think Brisbane's going to do better in the next couple of years, and if you own property there, I wouldn't be in a huge rush to sell. And if your main reason for thinking of selling is that you've had a bad run for tenants, I think it comes down to better property management. There's got to be better tenants out there, and it's a case of getting yourself a good property manager, I think, and trying to find someone who's going to look after the place a little bit better or stay put a little bit longer. Kevin, yes. So 375 square metre block in Riverstone, that's in the Blackdown Council area, which you bought 2 years ago for $440,000. It's amazing what you pay in the Sydney area for a very small block of land, but that's the market there. You're asking, should I sell it or wait? I think probably. I mean, obviously, if you bought a vacant block of land in an estate with a view to building something on it, I think do the numbers. But probably the best way to benefit from that investment is to build the house and sell at a decent price and hopefully make a profit from it. It's not, right now the market, generally speaking, is trending sideways or down, depending on which part of Sydney we're talking about. Let me just have a look at Blackdown as a suburb, or Riverstone as a suburb, in terms of what prices are doing at the moment. Maybe that can provide a little bit of guidance. Just bear with me for a moment. Okay, Riverstone. The suburb of Riverstone, so I hope I'm talking about the same area. In the Sydney area, median house price $810,000. Okay, so I would suggest that $440,000 block of land. You build the average house on there, you're probably going to be, I don't know, depends on how much you spend on building the house, but you're going to be ballparkish in terms of the median price for that area. The median price is up, according to these figures, 8% in the last 12 months. Obviously, there's been greater uplift in recent years. The last 3 years, the median price for Riverstone is up 26%, and over 5 years, 88%. So fairly typical numbers for what's happened across Sydney recently. In the last quarter, there's been no growth. That's fairly typical as well. Look, it's really hard to give definitive advice in a question like that, Kevin. It depends on your circumstances. You really do need to get some professional advice in terms of what you can put on the property, what it's going to cost to build it, and with the guidance from some professionals, including valuers, what are you likely to be able to sell it for? A little 12 months down the track, perhaps, and whether there's going to be some profit in it. Those are the sorts of courses of action I think that you should probably take. Get some good professional advice on what you can do, what it will cost, and what you might be able to sell it for. That will give you guidance, bearing in mind how the market's trending at the moment. I think those areas out around Blackdown are holding up better than the top end of the markets, where we're seeing the greatest decline, the greatest correction in property values, I think, at the moment. Colleen asking, does Gracemere in Queensland look like improving anytime soon? Look, I would have to look at it, Colleen, a little bit more closely to give you a definitive answer. What I do know to be true is that Gracemere is just outside Rockhampton, and Gracemere was a new development area that had a lot of new estates put in a few years ago, 5 or 6 years ago. I guess there was just a proliferation of new houses being built, and they built too many, and vacancies became very high, and so that market suffered as a result of that. But Rockhampton, like a number of regional areas in central Queensland, is now improving and showing signs of recovery. Again, let me just flick through as I'm talking and have a quick look at the numbers for Gracemere. I don't think they'll be that flattering, but you probably know that already, Colleen. It's the future you're interested in, not the past. But Median price of about 280 in Gracemere, down about 3%. All the numbers for Gracemere are negative for the last 3 years, the last 12 months, the last 5 years. So if you'd bought sometime in that period, if you sold now, you're probably going to take a loss. Whereas most of the evidence suggests that recovery is happening, and that if you're a little bit more patient, you're probably going to do better. In fact, there's an article that yeah, here we are. Sorry, I just wanted to put my hand on the right article. Heron Todd White, which is a national firm of property valuers, and they put out regular reports, and they include their property clock, where various markets around Australia are, including many of the regional markets, in terms of, are they rising, are they falling, are they at the bottom of the cycle, at the top of the cycle? And what they're suggesting in this report is that many of the locations in central Queensland are actually in recovery mode. And I agree with them on this, because our research shows something similar. They're suggesting that Mackay is kind of leading the recovery. We've certainly found that the Mackay market is rising. Sales activity is rising, vacancy rates have come down quite a bit, and we're starting to see evidence of price growth. It refers also to recovery being underway or close for locations like Gladstone, Emerald, coal mining town of Moranbah. Some of these places are actually seeing some increase in median prices, although they have dropped a lot in the last, say, 4 or 5 years, so they've got quite a way to go. But they also mention here, Colleen, Rockhampton, and the report says Heron Todd White Valuers believes that Rockhampton is now at the bottom of the market, and it does seem the only way is up for the city. So they've certainly got a fairly optimistic outlook for Rockhampton, and that's the general trend that we're starting to see in all the numbers for the regional towns and cities of central Queensland after some really tough years. And if you own property in Gracemere, you'll know what I mean. Prices have fallen over the last 3 to 5 years. People who own property in Gladstone have suffered, but vacancies have come down a lot. Sales activity is picking up. The resources sector, which has such a big influence on the prosperity of those places, their economies and their property markets, is coming back strongly. We're seeing jobs being created. Commodity prices are rising. All the factors are starting to look a lot more positive. So I think, yeah, the short answer here, because it's a very long answer, but I think it's useful for more people than yourself who might be watching and listening to know that, if you own property in places like Mackay, Gladstone, Emerald, Rockhampton, Moranbah, that better things are starting to happen, and you can be a little bit more optimistic about your property. Here's a question about Allen Grove and Strathpine, sort of north of Brisbane. Yeah, I think the north of Brisbane is actually, I'm just starting right now. Every quarter me personally, in fact, we go through the quarterly data on sales volumes for every suburb and town in Australia for our price predict index, which we publish quarterly. And I've done some of the smaller cities. I'm now doing Brisbane, so I'm just getting started on it, but I'm starting to get the feeling that from what I've done so far, that the northern suburbs of Brisbane have got rising activity. Activity is picking up, demand's picking up, and I think it's going to screw up quite strongly when I finish the exercise. But I haven't got to. It's an alphabetical order. I haven't got the Strathpine yet, so I'm not quite sure yet what the trend is there. I know it's a very solid place. In our recent quarters, when we've done this analysis, the northern suburbs of Brisbane have been actually the strongest part of the Brisbane market. The Moreton Bay region local government area in particular. There's been a number of suburbs there with growing demand for affordability, good transport links, good infrastructure, some major jobs nodes in the northern part of Brisbane. So, yeah, I think it's going to do okay, but I can't sort of specifically speak off the top of my head about Allen Grove or Strathpine. Okay, Sam is asking, is it a good idea to fix my interest rates on my home and investment loans? Yeah, I think the jury's still out on that just at the moment. So, I mean, I think there's been an overreaction in media to the recent very, very small increments by three of the major banks where they lifted their mortgage rates, their standard variable rates, I guess, by 0.14 percentage points, something in that ballpark. Very, very small uplift. Still a very competitive lending environment. You know, at the same time, some of the major banks have sort of cut interest rates in other areas. So it's a little bit confusing. I know that the data shows that more people are now fixing because they feel that there's probably only one way that interest rates are going to go, and that's up. I don't think it's going to be happening in a rush, and it's not going to be major. Certainly, the Reserve Bank has made it known that that it doesn't see any case for lifting the official rate anytime soon, but it does say that it feels that next time it does change the official interest rate, it will be up, not down. And of course, to a certain extent, it's become irrelevant because the major lenders are setting interest rates out of cycle, as it's described, just setting their own rates for their own reasons, regardless of what the Reserve Bank does. But it's a very competitive environment. The major banks who recently had that small uplift in the interest rates, they're competing with a lot of other lenders, second tier, third tier, smaller lenders. It's very competitive, and more people are turning away from the major banks and refinancing some of the smaller lenders. I think actually that'll be the first thing I'd look at. I was talking to some investor clients earlier this week who had a number of loans, both home and investment loans, where the interest rates were sort of 4.6, 4.8%, and they can do a lot better than that by if their existing lenders won't give them a better deal, you can refinance and go elsewhere where you can get an interest rate that starts with a 3. That's possible. So my first port of call, Sam, would be to look at can you get a better deal by refinancing? And if you can, go to your existing lenders and challenge them to give you a better rate. And if they won't, consider going somewhere elsewhere. Peter, what are some thoughts on Home Hill just south of Townsville? Peter, I can't really comment on Home Hill, too specific for me. I'd have to do a little bit of study, but I can talk to you about South Townsville generally, and that area, because I just think it's one of the markets that investors around Australia should be showing interest in. Townsville is currently in our most popular report is our national top 10 best buys report, where we list our top 10 picks for where we think you're going to see some uplift, taking a medium to long-term view. And I think Townsville rightfully has a place in that report. It's particularly good buying at the moment because it's been through a downturn period, as have many locations in regional Queensland. The pricing is attractive, but it's come into a period of growth because of the massive infrastructure spend that's coming up in Townsville. It's a very important city in regional Queensland. It's probably the certainly in central and northern Queensland, it's the number one city. It's the capital, really. It's where so many of the government services are located. It's got a very diverse economy, tourism, education. It's got a big military economy. It's got manufacturing. It's got a big impact from the resources sector. A lot of the big projects coming up in the Queensland resources sector are going to be headquartered out of Townsville. It's got an international airport, a seaport, so much in its favour. And there's over $20 billion worth of projects, infrastructure projects, property developments underway or in the pipeline to happen. So I just think that Townsville is going to be a growth market moving forward. But I can't really talk specifically about Home Hill. I just don't know enough about it. It's too specific for me to comment, Peter, off the top of my head. Tarina, what are your thoughts on Warragee, the Nowra area of New South Wales? Yeah. So you've got a lease in place for another 2 years. A lot can happen in 2 years. Let me have a look at what Nowra's done. Maybe I'll look at that specific suburb. Okay, so it's done pretty well according to these numbers. These are sort of medium price data from CoreLogic. For Warragee, I hope I'm pronouncing that right. I'm not super familiar with that area. I've been to Nowra in the past, but anyway, medium price 515,000, which follows an increase of 8.5% in the last 12 months. But in the last 3 years, it's risen 40%. That's pretty good growth in 3 years, well above average. I'll just have a look at Nowra itself and see what it's been doing. Median price of 460 after a rise of 16% in the last 12 months and 41% in the last 3 years, 73% in the last 5 years. That's pretty good growth. Yeah. It's, some of those areas have obviously got a ripple effect from the big city up the road. And so there's been some uplift, investors and others avoid those sorts of places as being attractive from an affordability viewpoint compared to Sydney, for example. So you've had pretty good growth already. Probably not going to see a lot more for similar reasons to Sydney, that a lot of growth has already been had and it's starting to wind down. But from what you're saying, you've got a lease in place for 2 years and you're thinking about what to do in 2 years' time. Well, a lot can change in 2 years, so you've got a lease in place. I wouldn't be thinking about it too much for the next little while and reassess when those 2 years are up, because a lot will have changed perhaps between now and then. Prospects for Kedron, recent and upcoming infrastructure improvements. Yeah, well, I mean, it just fits. I don't think, I get a lot of questions about specific suburbs, and we generally don't think in terms of specific suburbs because it's very rare for one suburb to do way better than all the suburbs that are around it, because you get a cluster of suburbs and they're all influenced by the same things. They're all close to similar things. They're in their midst, generally speaking. So it's not often that you have just one suburb that's an outperformer and the others around it aren't doing much. So I don't see any reason that Kedron is going to do anything particularly special, but I think it's part of a city and a precinct that I think is going to do better than it has in the last, say, 5 years. And partly you refer to infrastructure improvements. Well, certainly, as I've commented earlier in the broadcast, and I referred to some specific projects happening around the general Brisbane area, I think infrastructure spending is a large part of why I'm more bullish about Brisbane and expect it to perform better in the next few years than it has in the last few. Population trends, improvement in the the underlying economy and in particular infrastructure spending. I think suburbs like Kedron and many others are going to do much better. Peter, you're asking me about lenders. Do I know of any lenders where it's easier to secure investment loans, low doc or no doc for self-employed? Well, there are a lot of lenders out there. I can't name any specific ones that sort of stand out. All I can say is that there's a raft of lenders out there looking for business, competing with the major banks. Peter, it sounds like you're in a position where you're sort of classified in a certain way because you're self-employed. Well, I'm actually in the same position. I'm classified when lenders look at me because I own and run my own business. They regard me as self-employed, so I get put in that particular box. But certainly don't have any difficulty finding lenders willing to lend and competitive interest rates. Quite often I go to some of the smaller lenders because they're competing strongly for business and they offer some very attractive interest rates. The best advice is to talk to a really good mortgage broker. There's plenty of them out there, but one that I always talk to and is on my panel of partners with the Hotspotting website is Louise Lucas, the property education company. She's extremely good at, knows the lending market probably better than most around Australia. Peter, if you're interested in having I think that's what you should do. Talk to someone like that and find out what's out there because there are so many options. It's so competitive. There's, just as an example, a number of lenders are getting out of lending to self-managed super funds. And I've seen some articles saying that, it's all over for self-managed super funds. There's nobody willing to lend to them anymore. But I saw a list just today of the lenders that are out there that are lending to self-managed super funds, about 15 lenders out there. So there's lots of options, even for that restricted market where a lot of the big names don't want to lend in that market, but there are smaller ones that do. So Peter, talk to a good mortgage broker. If you'd like a contact number for Louise Lucas, so I would recommend to you to speak to, send me an email at just ryder@hotspotting.com.au and I'll respond and give you contact details. Much better to have a conversation with someone who's a real expert than someone like me that has a little bit of knowledge as part of what I do, but it's not my specialty area. And I try to avoid commenting on areas where I'm not particularly expert. So drop me a line, Peter, and I'll give you a contact where you can get a really good answer to that question. So, Sam, you're asking which estate suburb in Australia is picking up in the cycle? Is a good time to jump in the market? Well, here's what I think, Sam. A lot of people ask me, is it a good time to buy? And I say it's the wrong question. The right question is, where is it a good time to buy? Because it's always a good time to buy somewhere. We don't have one property market in Australia. I've said this so many times, but it's worth repeating. We have lots of different markets. We have thousands of markets and they're all doing different things. They're all moving in different directions, all influenced by local economic conditions primarily. So right now, while media keeps telling us that prices are falling everywhere, it's just simply not true. Take the CoreLogic data, for example, the latest report from CoreLogic, the monthly report. They've got figures for what I call 14 jurisdictions. Each capital city is a jurisdiction and there's 6 major regional markets, New South Wales regional, for example. So 14 major markets and 9 of the 14 have prices rising, or prices higher than they were 12 months ago, which puts the light of that general theme of media that prices are falling everywhere. We don't have one market, lots of different markets, and right now there are some very strongly rising markets. Hobart's still going gangbusters, but I think the best time to buy there is past. I think Canberra's showing signs of picking up. That's a market to consider for all sorts of reasons. And I don't have time to go into all those reasons right now, but suffice to say that when we look at all the numbers for Canberra, it's a rising market. Same for Adelaide, Perth is a recovering market. It's been down for the last 4 or 5 years, but it's now moving into a growth phase with attractive pricing because prices have been going backwards. I think Brisbane's going to get on board if some more of the ducks fall into line. And then you've got regional markets like in Victoria, Bendigo and Ballarat, places like Warragul, Bendigo and Barragate, north of Melbourne. South of Melbourne, you've got places like Warragul and Druin. That particular area is a strong growth area. Shepparton in regional Victoria is showing good signs of growth. In Queensland, the Sunshine Coast, and near where I live, is definitely a growth market. And we're seeing recovery in some of the, as I mentioned earlier, some of those regional Queensland markets. Be careful of those, the ones that are heavily influenced by the resources sector. They're volatile and high risk. But a place like Townsville is worth considering. It's coming into a growth phase. New South Wales, right across New South Wales, we've got strong regional cities that are moving into growth phases. They're on, it's quite normal for the capital city has a boom, and then later the regional areas follow suit. Even after the capital city is winding down, some of the regional areas are winding up. So you've got Newcastle in the last 12 or 18 months has been very strong, and the Hunter region near Newcastle is rising. Tamworth's looking very solid. Orange, Wagga Wagga, Dubbo, Armidale, there's lots of them to consider. Very affordable to buy there, much better rental returns than the capital cities. There's 50 different answers to your question, Sam. And many of them are places where right now it's a good time to buy. In contrast to the two biggest cities, Melbourne and Sydney. Raylene, just making a comment. Love your chats. Thank you, Raylene, for your feedback. Paul Lachlan is asking me, what do you think of Port Macquarie on the mid-north coast of New South Wales? Generally speaking, I think Port Macquarie is a damn fine place. It's a market that's done quite well in recent times. I think it's probably had a bit of a run. I think it's going to be very solid long term. It's just a very solid regional city on the coast with a great lifestyle. It's growing. It's perhaps we haven't actually featured Port Macquarie for a while. We did a couple of years ago. It was in our reports because it was a rising market, but it's had a rise and it's plateaued out for now. But it's got a future. The question I would ask about Port Macquarie is one that I'd ask about a lot of coastal cities: is just how dependent is it on tourism for its economy? Because cities where tourism is the main chunk of the economy, they tend not to have strong long-term growth property markets. The reason why I like the Sunshine Coast is it's been that in the past, but now it's changing through infrastructure spending and the creation of this new medical precinct, which is quite massive and already in place, and bringing lots of new highly paid people to the Sunshine Coast looking for real estate to buy, lots of other stuff like that. So those are the questions I'd ask about Port Macquarie. Has it got that potential to broaden its economy and grow and create jobs outside of the tourism sector to be a really strong, sustainable, long-term growth property market? Okay, Sam says, thanks, Jerry, with 4 thumbs up sign. That's a positive response. Thanks, Sam. I hope you found that answer useful. Anybody who's sort of the nature of this kind of forum where you type in a sentence and I give you an off-the-cuff answer, if you want sort of perhaps a greater discussion, that's possible. I do offer strategy sessions as part of the services we provide, where we can speak via Skype or by Zoom or some other technology and have sort of a face-to-face chat for, say, an hour about your circumstances and give you better answers, more long, detailed answers based on your own circumstances than is possible in this particular circumstances. Because sometimes I get asked questions here where the answer really depends on you, your circumstances, and the answer might be different for different people, depending on where you're at, how old you are, how many properties you own, all of those things. Okay, we've been going for an hour and 10 minutes, and the questions are still coming in. Paul, just responding, I just answered that question, Paul, about Port Macquarie. You're saying you agree on tourism, and you think that Port Macquarie is following the Sunshine Coast in terms of universities and the health sector. Yeah, I think you're right, actually. The last time we had a really detailed look at Port Macquarie, we were aware of some of those things happening. If that continues to evolve, Paul, then Port Macquarie is going to get stronger as an economy, and that's going to help its property market. So it's definitely, if that's happening, it's one to watch. I really like those, what I call evolution economies, economies that are changing and broadening and evolving and becoming more than they currently are. Those are good markets to watch. Sunshine Coast, very much on our radar screen for that reason. And plenty of other regional cities of similar ilk worth following, I think. Okay, excuse me a minute. I've been talking for an hour and 10 minutes. I've got a dry throat. Okay, yeah, for almost an hour and 15 minutes. We might be getting to the point where we might wrap it up for now. Certainly, thanks everybody for participating this evening. It's certainly been some interesting questions, interesting locations. I thought at the beginning it was all very Brisbane centric, but the geographical sphere has broadened as we've gone along, and we've had some questions of other parts of Australia. I do note that I haven't had any questions about a couple of markets that I think people should be showing more interest in, and I mean Adelaide and Perth. No one seems to be interested in Adelaide, but I think increasing. Let me just touch on that. I've got a couple of reports here that touch on that. According to the REA Group, that's the organisation, I think, that publishes realestate.com.au, the big website where properties are for sale, and they look at the numbers, the areas that are getting the most, showing potential buyers showing the most interest, for example, and they use those statistics to publish reports which suggest some of the areas that may be coming into a period of price growth. And this report from the REA Group's chief economist, Ryder describes Adelaide's market as relatively red hot. That's an interesting term. But in terms of price growth compared to the rest of the country, it's actually showing uplift, more so than some of the bigger cities. They're actually trending down, Sydney and Melbourne specifically. And it's over the last 3 months to the end of August, Adelaide showed the highest increase in dwelling values according to their figures. And Ms. Knisby describes Adelaide as an investment hotspot. Well, actually, I agree. And here's another report. This one's from Peter Kaluzos, who's the chairman of PIPA, Property Investment Professionals of Australia. And he's saying he thinks Adelaide is currently the best performing capital city market on the mainland. So he's allowing for the fact that the hottest market right now is Hobart. That's certainly true. But on the mainland cities, he's saying that Adelaide's the best performing one. Now, I think he's right. We look at, as I said, and I've said many times, we don't chart markets so much by what's moving in prices. We look at other factors like sales volumes. Right now, Adelaide has got the strongest uplift of all the major cities of Australia in terms of that. It's got more growth suburbs than anywhere else. And it's underpinned by a strengthening economy, all sorts of good things happening. Vacancy is very low. I think it's a market that people should be showing more interest in. And another comment from Paul, agreeing about the Sunshine Coast in terms of the infrastructure. Yeah, over $20 billion being spent. Medical facilities, the airport, the new CBD that's starting to evolve at Maroochydore, $1 billion being spent on the main highway, just inland from the coastal strip. So much happening there. It's just, and it's starting to be reflected in uplift in real estate. But yeah, just finishing off on Adelaide, I just think I'm finding it a hard sell, but I'm going to Adelaide next week to speak at a seminar. I'm certainly going to be having a look around from my own personal investment viewpoint. And there's certain parts of Adelaide that I think are very strong and tick a lot of boxes in terms of places to invest. Anyway, okay, just as I'm ready to finish, there's another question. Bozina asking about Wynnum. Yeah, interesting one to consider, because for some reason Brisbane doesn't sort of, the focus in terms of real estate and discussions about property doesn't seem to focus on the bay. I mean, Brisbane's got this amazing asset called Moreton Bay, and out there's some great islands like Moreton Island and the Stradbroke Islands, wonderful sort of water playground, and suburbs like Wynnum and Manly and others are sort of sitting there on the edge of the bay overlooking it. But Brisbane is sort of, in terms of prestige, is headed west rather than to the eastern shore overlooking the bay. I've never quite understood that, possibly because Moreton Bay doesn't really have beaches as such. That may be a factor. But anyway, Wynnum, good place. Those eastern suburbs are underrated, I think. Quite a decent level of affordability, sort of mid-range pricing, not sort of $1 million real estate, but sort of middle market. Good qualities in terms of being beside the bay, linked to the central city with train links. There's not far from there, Redland City has got some quite big development infrastructure spending coming up. So I think, there may be more focus on that part of Brisbane moving forward as the market generally uplifts. But yeah, it just seems to be overlooked, and I think it deserves to have more attention, places like Wynnum and Manly. Craig is asking, saying if you could look at the Queensland mining towns, it would be appreciated. Lots of properties have dramatically reduced in value. Is there relief on the horizon? You touched on it earlier, Craig. There certainly is. There's no doubt that the worst is over for some of those locations. We actually have some reports on the website that address that, because we get a lot of questions like that. If you go to the hotspotting.com.au website, click on locations, you'll find reports such as, there's one titled When Will Gladstone Recover? And there's another one, a similar title, relating to Moranbah, the coal mining town, because a lot of people bought in those places and values have fallen a lot. But what we've seen for Gladstone, for Moranbah, for Mackay, for Rockhampton and other places, one of the big problems was very high vacancies, because developers dived in and built too much stuff, and then the mining companies stopped renting local accommodation, started putting their workers in accommodation camps, fly-in, fly-out workers. But vacancies have dropped a lot in most of these places, and we're now seeing the beginnings of a return to growth in rentals and prices in some of these places, certainly an uplift in sales activity. So better things are on the horizon, Craig, as a general statement for mining-related towns and small cities in central Queensland and places like the Surat Basin. The resources sector is coming back strongly, and there's projects being cranked up and projects that were mothballed being brought back online, lots more jobs being created. So that's all good for the property markets in those places. But as I say, if you want a really detailed answer, go to the Hotspotting website, click on the location button, and you see there's some reports on specific locations, and increasingly we'll be looking at those, because in markets like Mackay, for example, worth considering again. But always keeping in mind, if you're thinking of investing in these places, that they are a little bit riskier than mainstream property because of those connections to the resources sector, which is very up and down. Jason asking about hotspots in Ipswich. I actually had a similar question earlier in the broadcast, Jason, which I answered in some detail, and you'll be able to sort of, when I finish the broadcast, which I'm about to do because I've been going for an hour and 20 minutes and I'm starting to run out of steam, when I finish the broadcast, you'll be able to click on it again. And I referred to Ipswich a number of times because I've had a lot of questions tonight, and I had some specific information about particular areas of Brisbane that I think are showing growth both in population, and I touched on the Goodna Redbank precinct as one in particular. So have a listen when you have a chance to the whole broadcast, and you'll see a number of references there adjacent to Ipswich. I'm going to call a halt. It's time to go and have some dinner. I've been going, as I say, for an hour and 20 minutes. It's been a great session. Lots of questions. A lot of them have been about Brisbane. It's interesting that there is so much interest in Brisbane. I think recent research from Pippa, I mentioned the Property Investment Professionals of Australia, their recent research shows that when they asked their members, who are all investors, which city you think is going to be best to invest in the next 12 months, the biggest single answer is Brisbane. So a lot of people have faith that Brisbane is going to rise. I think it's going to improve. So we've had a lot of questions about different areas of Brisbane tonight, understandably, but a little bit disappointed we didn't have more questions about the other cities I think are worthy of attention, specifically Perth and Adelaide and Canberra. Anyway, that's it for now. I'm going to call a halt. Thanks for your participation. Lots of good questions, and really appreciate your interest. If you want to follow up and learn more about some of these locations, go to the hotspotting website and look at the location reports page and see if we've got a report on your area of interest. That's it for now. Terry Ryder signing off. Let's do it again next month.